Brandon, how do I know if an investment property is a good deal?
Well, it depends. What's the purchase price and how much does it rent for?
$500,000 and it rents for $5,000 a month.
Okay, perfect. So let's run the numbers on that. So first thing we want to do is look at the monthly rent, which you told me is $5,000. And then from there, we have to subtract your expenses for carrying this property. So you're going to have a management fee. Figure that's going to be 10%, which equals $500 per month. You're also going to have property taxes. We're just going to estimate those to be $400 a month on the property. Insurance, once again, we'll estimate it to be $200 a month on this property. You're also going to have utilities, most likely, that you're going to cover for the tenant. Let's say 10% of the rent, so that's another $500 that you're paying. On top of that, you're going to want to have reserves for vacancy and other factors. Figure that's 5%, so that's going to be $250. You take your $5,000 in rent, you subtract all of these expenses, and it leaves you with your net rental income per month on that property of $3,150. To figure out your annual net rent, you're going to multiply that by 12 months, which there's 12 months in a year. It gives us $37,800 of rental income. From there, to determine what your cap rate is you're going to divide that by the value of the property. So you said it's a $500,000 purchase. That's going to give us 0.075, and we're going to multiply that by 100 to determine that you have a 7.5% cap rate on this property. Ideally, any cap rate between 8 and 10% is ideal for an investment property, but this is still a solid deal at 7.5%.